A new week means new opportunity for Tesla stock, and this week could get absolutely crazy. We have big economic data coming out that will drive the markets higher or lower. We also have some interesting news coming out for Tesla over this weekend. We have everything you need to know and much more in this video. But first, if you want to make more money, you want to reach financial freedom as quickly as possible, or just watch us go on CNBC to roast the bearish analyst, hit that subscribe button as well as the like button. Now let's go ahead and get straight into it. Tesla stock actually fell about 2% last week. This is really a consolidation at the higher end levels that we have seen around $284 per share. I expect this week to get a much bigger move for Tesla stock. And while it could go either way depending on economic data, I think there's a lot of tailwinds that should push Tesla higher this week, including the option activity, which remained very bullish last week. Even though Tesla stock technically fell about 2%, the 280 call looks to have been the most active call, expiring this upcoming Friday. On last week, on Friday, you seen volume of 87,000 versus open interest of 11,000, a clear indication that people are going out and making their bullish bets. On top of that, the $300 call seen volume of 36,000 with open interest of 20,000. Virtually nobody is buying the puts to the same degree as we are seeing the calls being put. And even the 285 call seen volume of 33,000 with open interest of 6,700 on Friday, as well as the 290 call seeing volume of 37,000 on Friday. Again, clear indications that people are betting Tesla is going higher from here. We also have the highest number of shares that are currently sold short, sitting at 96.5 million shares. Short sellers are losing around $100 million every dollar Tesla stock goes higher from here. So every single dollar move is pretty bad for the short sellers. And I think heading into Tesla's earnings with expectations so low for margins in between 8 and 10% net margins, you probably want to reduce some bearish exposure heading into Tesla earnings. That makes a lot of sense to me. So I do think that is a tailwind factor that will have a bullish effect from now until Tesla's earnings on July 19th. In after hours. So watch this developing story. We should be getting another report of the short interest. We'll see if some shorts did cover slightly on some of their short positions, or if the short positions continue to get larger. You're currently sitting at about $26 billion worth of these short positions. So there's a lot of fuel on the fire to potentially rally from here, just based off of some shorts reducing short positions. Some of the biggest news over this weekend for Elon as well as Tesla is that Elon Musk sues Watchtaw law firm to recoup fees from the Twitter buyout. Musk is accusing Watchtaw of exploiting Twitter by accepting in the final days before the October 27, 2022 buyout closed, huge success fees doled out by departing Twitter executives who were grateful that Musk would be forced to close. So Twitter essentially paid this law firm because Musk was forced to close, and Musk says that should have never happened. I don't expect this to be a big deal for Tesla, but anything that has to do with Elon Musk could have a positive or negative effect on Tesla stock. Tesla is offering to pay people between $18 and $48 an hour to drive its EVs this summer. Tesla is hiring seasonal test drivers to help train full self-driving. And specifically, they want to train full self-driving around the problem areas. Some of your left turns, some of your weird intersections, kind of what we seen in the video with Ross Gerber and Dan O'Dowd. That was a very weird intersection. Tesla wants to improve full self-driving in those tricky situations. And that's why they are hiring some of these drivers to drive Tesla over this summer. Because a couple hours here or there, a couple wrong mistakes, every couple of weeks per driver is not going to do as much to train full self-driving rather than just people going and doing the same intersection over and over again until Tesla gets it right, until full self-driving gets it right. So this could be a big improvement for full self-driving over the course of this summer, and that would be a positive thing for Tesla stock. France is upbeat on attracting a major Tesla investment. The French minister Bruno Le Maire on Sunday said he was very hopeful Tesla chief executive Elon Musk will pick France for a substantial investment linked to the production of electric vehicles in Europe. Asked whether an investment would be linked to battery cells or other parts of Tesla's business, Bruno said several options are on the table. Musk knows that he would be welcomed in France. It's up to him to take the decision. Now, given some of the delivery numbers that we are seeing lately, up 83% year over year, I think additional factories and really continuing with this lead that Tesla has in the EV sector itself would be a positive thing for shareholders, although that would mean less potential profits to the bottom line as they would be expanding more aggressively. But obviously, Elon is in talks with a bunch of different regions for factories, and this is all but unconfirmed. And look at this, full self-driving saves the day. The bears are not going to show you this, but full self-driving just prevented an accident, as it has done hundreds and thousands of times before. It continues to be safer than letting your drunk or assholes drive freely on the roads. John Murphy with Bank of America just raised his price target from $225 per share all the way up to $300 per share. And that is because he believes Tesla's demand and deliveries will continue growing nicely throughout the year. Fed Goolsbee sees golden path to lowering inflation without a recession. This is what you want to see as a Tesla investor. You do not want to see a recession. What is hit the worst during a recession? It's the auto market. Hands down, that is hurt the worst. If we avoid a recession, and any talk about avoiding a recession is going to be positive for Tesla. Now, I can make an argument that the $7,500 tax credit, the fact that Tesla is EVs and not traditional combustion engines, that would mean Tesla could do a little bit better than obviously the broad EV market or auto market in general. But this would still not be positive if we start to go down the path of a recession. That's why the economic data we get for this week will be so important. On Wednesday, we are going to get the inflation report at 8:30 in the morning. You're expecting the headline month-over-month reading to come in at 0.3%. This is up from 0.1% at the last reading. This would be a sharp increase on headline month-over-month inflation. Headline year-over-year inflation is expected to fall from 4% to 3.1%. Core inflation year over year is expected to fall from 5.3% to 5%, and core inflation month over month is expected to fall from 0.4% to 0.3%. So you're expecting a decline on inflation besides your headline month over month reading. Obviously, anything higher than expectations is going to be negative for the markets and could be a negative thing for Tesla. I mean, it could make Tesla fall, as Tesla is very much connected to interest rates, as well as, like I previously said, a recession. Now, Thursday, you're going to get PPI month over month. This is probably not going to be the biggest catalyst just because we get CPI the day before, but it still could have a big effect on the markets. Last month, PPI month over month came in at negative 0.3%. You're expecting positive 0.2%. So you're already expecting a pretty big up move for PPI month over month. There's probably room to come in better than expected. And finally, on Friday at 10 o'clock in the morning, you're going to get the Michigan Consumer Sentiment Survey. You're expecting a number of 65.5. That would be an improvement from last month's reading of 64.4. But what really matters is the inflation expectations. The one-year inflation expectation last month was 3.3%. You're expecting that to fall to 3.1%. You have seen a nice downtrend in one-year inflation expectations after hitting that high of over 5% in July of 2022. Now, 5-year inflation expectations, this has kind of been on an uptrend recently. If you come in higher than 3%, that's going to be a problem. We're expecting inflation, 5-year inflation expectations to come in at 2.9%. Now, I think most of you guys care really about what's going to happen with Tesla stock. Now, the factors that I mentioned in the beginning of this video are important. You never want to bet against Tesla heading into a major catalyst. I think the bears and the shorts learn this betting against Tesla heading into Tesla deliveries. So the fact that you have the highest short position that you have seen on Tesla in over 2 years, at the same time, you've actually seen on the broader markets, shorts closing out short positions at the most aggressive pace in 3 years, really makes for a distorted reality of Tesla stock. Shorts are covering everywhere else besides in Tesla. And I think any kind of good news this week or encouraging positive data is going to have a much bigger outlying effect on Tesla than it will for even the broad markets, because earnings on July 19th, we're expecting bad margins. At least analysts are expecting bad margins. If those margins don't come in as bad as expectations and Tesla beats on that EPS number, that's going to change the valuation calculation for Tesla. Even though today it's very inexpensive compared to big tech, it would become more inexpensive compared to big tech. Obviously, using the PEG ratio. If you compare straight up PEs, which is never the right way to value a growth company, then it looks expensive. If you factor in EPS growth, it's actually one of the cheapest big tech names that you can buy right now. So in a worst case scenario for this week, if this week just absolutely falls down the toilet because maybe inflation comes in hot, that big level of support is going to be at 250. You'll see a level of support at 260 as well. But if things all hell breaks loose and the markets do crash, essentially, you could go as low as 250. That would be my expectation. Now, what I actually expect to happen is for Tesla to make its way closer to about $300 per share. Keep in mind, for Tesla to move to about $300 per share from here, that is only an up move of about 8.75%, about 9%, to see Tesla at $300 per share. To get Tesla at $295 would be a 7.5% move. If economic data comes in encouraging and inflation continues to fall, Tesla could see an over 5% move in a single day. So I am expecting Tesla to make that up move closer to about $300 per share this week, due to the factors that I have previously mentioned. I think the option activity will continue to have a bullish effect on Tesla because even on the red days, well, people have been loading up on these calls. Now, Tesla is still experiencing a golden cross. That is where the 50 and the 100-day moving averages broke above the 200-day moving average, and this gap is becoming wider and wider as Tesla stock has remained at these higher prices. Now, the RSI is also reset. You're sitting at 66.26. Anything under 50 is bullish. Anything over 70 is overbought. You're not overbought anymore. You don't have this negative factor of the RSI being overbought against the stock. So I think that does give us some room to rally from here. And even if Tesla stock almost instantly rallied to $300 per share, you would still be lower on the RSI than where we have been historically during rallies before. So I think there is a lot of room to rally here. Again, given the valuation is so cheap. Now, if you guys do want to come trade with me live in real time every time I make a trade and get a notification, as well as get access to the newswire and other cool things that are added over there over time, link down below in the description of this video or in the pinned comment. And if you guys have signed up for that, check your Patreon for a link and a message from me personally. Something else to consider with Tesla stock as well, you have just formed a bull flag pattern. This is one of the most bullish technical patterns that you can form ever. And it typically leads to upside of about 18%. Now, upside of 18% from here would put Tesla stock, let's see, at about $322 to $323 per share. That's the kind of upside that we could be looking at even before earnings if the economic data comes in positive. And this bull flag pattern is recognized as bullish about 85% of the time. So more times than not, you don't want to bet against a stock with a bull flag pattern. But that is going to do it for this video. That is what you need to know, everything that happened over this weekend with Tesla, as well as what we can expect in this upcoming week, or at least what I expect in this upcoming week. Hit the like button and subscribe to the channel on your way out of this video. Check out the links down below in the description of this video for the merch, for the Weeble. Get yourself some free money, as well as the Patreon. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.